Hey everyone, it is Evan here from the Trade Risk on Friday, April 5th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump right into it with our dashboard here and take a look at the gains we saw this week. Right across the board, we finished the week off strong on Friday. All the major indices in positive territory. 5-day change number, nice and healthy here over the past 5 days. And if we look to the right, we got green check marks here. All of the major indices have reclaimed above the 10, 50, and 200 SMA, and we closed above last week's highs right across the board. When we scroll down just a little bit, we can see sector performance here. We got semiconductors shooting to the top of the list, rounding out with materials and financials for the top three. And on the bottom three, it's exactly that defensive tone that you might expect. We got healthcare, utilities, and staples all hovering around flat to slightly negative on the week. In terms of major markets, we have oil, China, and emerging markets all rounding out the top three for performers. And on the downside, we have volatility, we have bonds, long end of the curve, and the middle end as well with IEF and TLT. So a strong week of performance to kick off the second quarter. We saw a lot of window dressing comments last week saying, oh, the market was up because we were marking up into the end of the quarter. And now here we are kicking off a new quarter, seemingly even stronger than last. So 2%, that's the weekly progress here for the S&P 500 this week. And you can see we're lifting away from two levels, one finally getting away from that 2,800 level, and you can see we could, continued higher and really just cut right through that 2872 area, which we had talked about in the last several videos as being sort of the breakdown zone from 2018. And as it sort of stands now, when we look here at the S&P 500, we are approximately 1.5% away from the all-time highs right around 2941. So if we can duplicate this week's performance, even do a little bit less than this week's performance next week, we will be testing those all-time highs in the S&P 500. So weekly trend here continues to be in control by the bulls. It really just has been relentless to the upside. Doesn't mean it's been easy because there's always periods here where we've got these shakeouts and things look like they're about to reverse and it's tough to chase a market. But when we just kind of look back at how this move sort of manifested, it's really just been tremendous strength to the upside, and all of the several day kind of pullbacks we've seen have been met with the sort of magical buy the dip, and there's really gotten no follow through selling to the downside. So as it stands, S&P 500, 2941, that's the upside level to pay attention to. I'm still watching 2872 and then 2800 on the downside. That is the zone for the bigger time frame, and we can see here that the MACD continues to trade here and make new highs along with price on the year. If we go down to a daily chart, look at things a little bit closer here. It really started this week with Monday's action. We saw a gap up on Monday, and we basically had a gap and go type of day. We opened up near we opened with a gap higher, and that was the lows of the day, and we just continued to sort of melt up here on Monday and close above the prior week's highs here, Thursday the 21st highs. So we had that gap up, we closed strong, we had sort of an inside session just about on Tuesday, and then we just kind of ratcheted higher here into the end of the week. We are extended. It's tough to chase. That's been the moral of the story, though. The tune really hasn't changed. We've continued to say, kind of bulls in control. It's tough to chase, and just be diligent with your positions and understand your risk. And that continues to sort of be the narrative here. Bulls remain in control. And moves to the upside are working. Now, of course, as we get moves like this, we have the VIX now, which is down, I think, making new year-to-date lows. Looks like it popped up a little bit. Just about a closing low here for the year. I mean, it's under 13, so we're getting back into those complacency levels where, we've traditionally have seen some, a little bit of a shakeout kind of occur here, maybe a 1, 2, 3 day pause rotation in the market might not be unreasonable, but until and if these trends and support levels really start to give way, we got to respect the bull case here, and looks like at this point there seems to just be a magnet to retest the all-time highs in in the S&P 500. So that is really the scoop there. Not a whole lot has changed. When we go to the IWM here, this is a notable kind of week here for it because, certainly the price structure is different. Take a look at where the IWM is in relative to its prior highs. So its all-time highs it made in mid-2018, that was about 10% higher. That was all the way up here around 173. So we have a very different looking sort of price structure here on the intermediate term for the IWM. It's not as bullish. However, in the short term, as this was going through its consolidation period, we talked about last week kind of looking to get some resolve either above 156 or back below 149 to see if the series of lower lows and lower highs were going to continue to be intact. Those appear to be invalidated or getting pretty close to being invalidated here with this close back above this this pivot here. It might mean we're range bound, doesn't mean we have to go off to the races, but it was some nice rotation getting that MACD back in positive territory for the IWM, and it had a 2.8% week, looking like kind of a five or so week consolidation pullback, and now we're starting to rotate higher, if you will, and take a look at that MACD on the weekly chart, already starting to inch up to new relative highs here versus price, which hasn't quite done that. So IWM, I think this will be the key one to watch here to see if we can continue to get some rotation here. Perhaps some of the industrials and materials, the semiconductors take a little break, and now we see rotation into small caps. That's of course the bullish scenario for next week. The bearish scenario would be we see an abrupt failure here, a rejection of higher prices over 156, fall back into this range, and we continue to kind of slog it out to the downside to maybe slightly lower. That would be your bear case there in the IWM. If we finally look at the NASDAQ 100, you can see much like the S&P 500, nice kind of gap and go to start off this week, and then we basically just chugged along higher. If we zoom out here, you can see we're getting very close also to the prior all-time highs. We're even closer here, about 1.25% away from the October all-time high, or I guess summertime all-time highs back in 2018. So extended markets, yes. Some complacency, probably. Is it easy to chase? No, but bulls continue to be in control. That's sort of the story there, and depending on your time frame and strategy, that's sort of the context that you have to sort of navigate. So with that said, let's get into some of the other major markets here. We'll go to TLT, which did sell off this week. So equities gain was TLT's loss, minus 1.91%. We took out last week's lows. We still have this general uptrend here. We're still holding above the key breakout area of 122.50 or so. So this could just be a healthy kind of pullback retest, so to speak, for bonds. And that's something we want to pay attention to in the coming days and weeks. I think I'm on the wrong board here. Switch over. Yeah, so that's the yellow line there is the breakout level that we want to see this hold, and so far we are holding above it, so all is well as long as we're above there. If we start to lose it, then maybe this breakout was sort of a false head fake breakout, but that's sort of getting ahead of ourselves right now. We'll see how next week follows up this type of pullback. If we look at USO here on the week, it was a monster week, 5% to the upside, really kind of getting vertical here and finally getting a little momentum in its step. It was grinding very slowly and sideways, but slight tilt to the upside over the first quarter of this year. Now you can see a little bit more excitement here in this move to the upside. We are now kind of getting back into some prior supply levels. And if we throw a retracement on this bigger, let's see, if we put a retracement on the big move that we saw to the downside in the third and fourth quarter of 2018, we can see now that we've retraced just about 55% of this big move down here. So quite an impressive rally. I mean, it took a little bit longer to get back up to 55% than it did on the way down, but we're here, and we'll see how the market starts to react at some of these prior supply levels, golden ratio level, if you traders looking at that, we'll, in the coming days or weeks, we'll see how that reaction is. As it stands right now, short-term trend intermediate term trend, you could argue, is up here in oil. It is extended, tough to chase, and bulls are in control, and we'll see if they can hold on to that momentum and trend. If we look at natural gas, a little bit of an attempt to reverse here towards the end of the week. You could see it ended flat here on the week after pushing down, or attempting to push down at the start of the week. Still is struggling here. It's trading just off of its lows for the year, so not a whole lot to like about it. Lots of consecutive down days over the past 10, 12 trading sessions. You can see there's only about 2 green blips there of buyers kind of closing positive, so that can change. Natural gas is quite the animal where if it wants to start to rip, it really can start to move. So let's not fall asleep and get too complacent here either in natural gas if there's potential trades, but for now it's just sellers in control here for this commodity. Finally, for metals, we'll look at GLD next, which on the week here closed about flat and sort of rejecting some of these recent lows. There's some potential here of a reversal. We can see that we had a pretty interesting sort of loud day session on Thursday where we had this gap down to new lows, or new relative multi-month lows, and then we saw a strong finish inside day on Friday. Note as we retest these prior lows here, we get a little bit of bullish divergence here in momentum, so that is constructive. Maybe get a nice kind of rotation bounce here and into next week. That would be constructive, and then hopefully we can sort of negate a potential topping pattern there for GLD. Silver is pretty much the same thing. Thursday was the loud day. We had that sell-off below prior lows. We saw the nice reversal coming in at a very key level is $14. That was the big breakout from January. So we retested it, closed strong, and more or less an inside session here on Friday, not quite. And again, positive divergence on momentum. So metals, excuse me, have some potential to bounce next week. So let us get into sectors on what performed and what didn't this week. Top 3 and bottom 3, that's generally what we look at here. And semiconductors, quite remarkable at how fast and how swiftly and how rogue this move has been back to nearly all-time highs. We talked about, I think this was sort of ingrained in us, this big breakdown that we saw from this long sideways over a year-long range. We had the big nasty breakdown, and then we saw just a very vertical kind of recovery here back in through the supply, and with a series of gaps recently, we are almost back to prior all-time highs. And this was sort of the prior hallmark leader for most of 2018, 2017, for much of this recent bull run, and now we can see semis getting back into rotation, into favor here. Might be, again, a tough chase for sure. I mean, we've covered a tremendous amount of ground in short order with a series of gaps here. It is a very difficult chase, so I'm not sort of advocating or suggesting that by any means, but it is just impressive to see the relative rotation back into this group. But that leads out top performers 6%, coming back into prior highs. Tough for me to want to buy right here, but certainly one to pay attention to. Materials, we talked about this last week at sort of the promising looking sector here as it was kind of coming back and retesting this $56 resistance. It broke through it this time around, call it number 5, 6 time around on testing 56. Broke through on volume, straight line to the upside, getting back into this prior range here as well. Short term, it's quite extended, but overall, I like the fact that we're trading back above $56. Can use that as a good reference point for future trades. XLF also coming back into prior supply here. Again, tough road right around this $26, $27 area. There's lots of supply, lots of failure over here, but it's something that could look like an XLB in a week's time if we see, a surge of volume and a swift move, expansion in range, a nice big gap up, and all of a sudden we see financials start to rotate. That's certainly a catalyst for this market as well. Not saying it has to happen. It's, again, a tough buy-in here coming into resistance. I would not necessarily want to be the new marginal buyer right here, but if we start to break out, if we start to get more confirmation that we're clearing this level, that might change the story there for financials. On the downsides, it's staples here, which again, closed slightly down on the week, but when we look at it overall here, it's still trading, kind of in this overall uptrend that it's been in for most of this year. Got a kind of a 3-day pullback here, and we'll see if it just picks back up and forms a higher low. Utilities, kind of the same thing, trading just off of its all-time highs here, selling off back into this $57 area. It's where you'd expect some support. Maybe a rally sets in from here, but 57 or so, that's where you'd want to see it hold. And healthcare, I think, is actually interesting here. You know, it's generally a more defensive area of the market, but it can hold some of the more volatile names as well. But XLV, you can see a little bit of tightening going on here, higher lows and lower highs, getting ready for some maybe apex, breakout here, maybe some volatility expansion. So let's pay attention to this general zone here on the upside, call it 92.75. On the downside, we'll say, about $90.60 or so. Watch those two areas, see if we get some rotation and expansion here in healthcare. So that is the video. That is the recap for this week, first week of the second quarter. Thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us on the TraderS blog to stay up to date with all of the latest videos. Have a great weekend, and we'll talk to you next week.